Hi there, everybody. It's David Roach, Quantum Economics and Independent Strategy. We're going to be talking today about untying the knot between global supply chains and globalization and what it means for the economy and for you. First of all, I guess the best thing we can do is actually decide what globalization actually was. Well, put it in its simplest form, it was when the populations of China and all those countries behind the Iron Curtain were liberated and could go forth and seek gainful employment, supplying the world with investment in consumer goods. And this brought a vast new supply of labor into world markets. And the result was twofold. The first result was, of course, that the supply of goods on a globalized basis, moving from where they were produced to where they were consumed, became a major force in world economies. But because the supply was increasing so fast, that actually reduced the price. We'll come back to that in a second. The other impact was, of course, because the labor supply was increasing so fast, wages and salaries actually fell. And not in terms of reducing living standards, because goods which were traded were becoming cheaper all the time, but certainly in terms of gains from people employed in factories, right up into the middle classes of Western societies. There is no doubt that globalization reduced and depressed wages, at least their growth, and in many cases, the absolute amount that was paid per hour. Now, these are the things that we have to bear in mind. As a question of statistics, globalization really took off, I would say, in the 1980s, probably at the end of the 1980s. And if we look back at the figures, in 2008, the share of China in global trade, this is just manufactured goods, was around 2%. In 2020, it was 14.6%. And then during the epidemic, it jumped another 4%, principally due to the supply of the technology for working at home, and of course for protective equipment, masks, and all that sort of thing to fight COVID infections. So that's an example of what China did and how it benefited. But that's not the whole story. Of course, if you look at the world economy, in 1980, which is round about the beginning of when globalization started to happen, world trade, again, in manufactured goods and associated commodities, etc., was around 20% of GDP. And by 2021, it was 35% of GDP, of world global GDP. Now, as GDP wasn't standing still either, but was itself increasing, this is a huge increase in the share and contribution of globalization to world trade. Now, world trade does not give you the full picture because it does not measure services. It does not, in any case, measure them accurately in any way. And services were probably at the beginning of this period equal to about 20% of world trade and manufacturers. And by the end of the period, it was probably 75%. Again, not properly measured, and that's coming straight out of my own back of the envelope calculations, but it goes to show that world trade is just so important when it comes to looking at what happened to global GDP. And I would pretend it was a causal factor in causing GDP to rise. In other words, world trade rose, of course, because GDP rose, but it also was a pushing on GDP by making the supply of goods cheaper, more affordable. But not only that, but making the allocation of capital more efficient, making the application of technology more efficient. Because if you can organize your factory to do the job more productively in China or in Thailand or in Vietnam, then by moving it there, you will actually increase world GDP more than if you kept it at home and labored on in an uncompetitive situation. However, there is absolutely no doubt that globalization is the most unpopular form of increasing global living standards that I have ever known in my lifetime. And the reason for that is very simple. It increased inequality, not only in places like China, which have got income and wealth distribution patterns which resemble the worst of the emerging markets like Brazil, but worldwide. It made vast swathes of the working population in developed countries poorer because they lost out. Now, how did they lose out? Number one is they lost their jobs, of course, in manufacturing because they moved and they were probably not skilled or educated enough to get jobs in the new growing sectors, which went to people with higher skills. So the people with higher skills got paid more and the people who lost their jobs got paid less. So income differentials widened hugely. And of course, these people who lost felt left out and they started to resent globalization enormously. At the same time, of course, because globalization increased supply from cheaper sources of manufactured goods and indeed services in some instances, it pushed down inflation. As it pushed down inflation, central banks reduced interest rates and bond market yields fell. As those things happened, asset prices rose. Now, those asset prices are principally, let us say, bonds and equities. And as those prices rose, the people who own them became wealthier. But if you look at the distribution of who owns those assets, it is the rich and not the poor. It is not even really predominantly the middle classes, maybe in their pension funds and things like that, but they don't really feel it in their pocket every day. So essentially the disinflationary process, which globalization contributed to in a very meaningful fashion, created wealth disparities between the haves and have-nots as well. So in the end, globalization became hated. And of course, given the advent of populist politicians who reflect popular moods rather than any educated analysis for their opinions, the politicians responded. So globalization is really, in many respects, on the way out. Now let's look at the consequences of that and look how it has happened. In actual fact, if you go back into history, you will find that globalization, in terms of the liberalization of markets, liberalization of international trade, that peaked out in approximately the year 2000. From that date on, there was increased measures by governments to impede trade, so regulation, and there were increased tariffs from that day on. So it started way back, the end of globalization. It started when people said, okay, well, all this palaver and talk about free markets is all very well and good, but they have to be limited because they are creating too much inequality and resentment. So in a sense, it's the reversal point for the extreme liberal economic view that the world doesn't need any form of regulation. The smaller the government is, the better, and let the markets rip. That started to reverse as regards globalization already in the year 2000. That's a very important point because, of course, then a number of things happened which called it into question even more. Let me say that one thing that happened is, of course, the great financial crisis. That caused globalization to take a back step, but it was a back step. Actually, when the effect of the global financial crisis waned, globalization in terms of international trade as a percentage of GDP and in terms of the growth of international trade bounced right back. Where it really took a hit was with the pandemic. It was already, as I said, from 2000 starting to go down in terms of liberalization. But from the advent of the pandemic, it became impossible to move goods in the same way as we did in the past. And that caused globalization to really fall away. You couldn't get containers, you couldn't get goods into containers, you couldn't deliver them to where they were wanted. So the pandemic added to the deglobalization pressures. But before that actually happened, of course, Trump's trade war with China was already putting a lot of pressure on corporations operating global supply chains. and many of them up to about, by opinion polls, only about 3/4 of the foreign corporations operating in China said that they would actually like to move their production to another country and out of China. Now, partly that reflected the fact that China has become more expensive and labor rates have risen, but it also reflected the fact that there were more and more trade protectionist measures imposed on the output of companies operating in China. So a fair number of them moved to places like Vietnam, Taiwan, and so on. Not a huge amount, but it was significant. So to put it in order, the first thing that started to really accelerate deglobalization happened as far back as the year 2000, which is the regulatory reversal. The second thing was Trump's trade war, and the third thing was the pandemic. Now, then of course came a lot of other things. For example, the hacking of various corporate and government accounts by players both from Russia and China exposed the vulnerability of supply chains, not only global supply chains, but domestic supply chains like energy suppliers in the United States from domestic sources with out-of-date hardware and software that fell victim to this. And this focused the minds on people that you really should have control over your supplies, over your supply chain. And the very fact that you had these incidents has marked another significant step in building up pressure on global supply chains and in making companies pay a premium to produce things perhaps less efficiently, but produce them closer to home. That is a key factor. Another key factor is the blockage of the Suez Canal, when containers full of goods and services, not only on the ship that actually blocked the canal, but on dozens and dozens and dozens of others, did not actually reach their destination. Again, people are reminded that global supply chains are infinitely vulnerable to very small disruptions. We also had disruptions among internet carriers. I'm not talking about the Googles of this world. What I'm talking about is the actual companies who supply the background skeletal framework for data to flow around the world, the people who actually plug the cables into routers and so on behind the scenes. We've had at least 2 major disruptions to that, to those networks, which resulted in very widespread outages, which again reminds corporations that doing business on with a global supply chain network is a risky thing. So to wind that up, those factors, what that actually means is that corporations are prepared to pay a premium in order to secure their supply chains. And that means that they will automatically reduce their dependence on global supply chains and on, of course, globalization. Now, if that were all, that would be quite enough to say that this is a pretty major effect, but it is not all. Perhaps the biggest element coming out of the pandemic is the fact that we are going to have big governments. We're going to have a lot of social inequality because the pandemic made people with low-skilled jobs, they first of all lost them, now they can't get them back, and they really cannot compete in the marketplace for where the jobs are being created, which are very high-skilled. So the winners and losers polarity is actually getting more extreme. The same is true for wealth, because wealth did not go backwards in the pandemic. Wherever you look, you will find that the big investors, the rich, made more money out of the pandemic, more money, for example, than would be needed to vaccinate the entire world before you blink. And the extremes are growing. So that factor, together with the fact that government is very big, has huge debts, needs to finance them at low interest rate costs from the central bank, and needs to keep the population quiet, even though social inequality is going to be growing, means that governments will themselves become one of the major institutional backers of the repatriation of jobs, the repatriation of production facilities, be they in services or manufacturing, to home economies. Now, that will undoubtedly be less efficient in a pure economic sense. It will also mean higher rates of inflation, because less productive investment, less productive output actually needs to command higher prices in order to finance that inefficiency. but that is where we are going to go. Is it the end of the world? Not really, because coming out of this pandemic, one thing is very clear, and that is what I would call the robotization, the increased use of A1 high-tech robots to carry out both service jobs and productive jobs in manufacturing, production jobs in manufacturing. That has taken a huge leap forward. And there are many studies, including those from the IMF and other such worthy institutions, which show that pandemics actually increase automation and lead to the loss of the lower skilled jobs in those supply chains on a permanent basis. And that is exactly what is happening. So when the semi-populist or center of the left governments, which are now the vogue in practically all places which get to choose their governments, when they force the repatriation of jobs, when they recreate the national as opposed to the international economy, they will rely upon a robotization, automation of those repatriated jobs, which ironically will not solve the problems of inequality. They will actually increase them. But nevertheless, it means that those corporations can produce at a cost level, at an efficiency level, which allows them to exist even in a national, less productive economy than an international, more productive economy. What does this mean for you? Well, it means essentially you will end up with your shopping basket full of many more goods that are produced at home or very close to home. It means you will pay more for them. And it means that in various forms, you will have to subsidize government as it achieves this less efficient national economy. The inflation rates will be higher. Social transfers to offset inequalities will become a greater factor. And of course, the governments will attempt to make the rich and corporations pay for this, probably unsuccessfully, which heralds the way to, or makes more likely that we are going into a period in which low growth and low productivity will be the hallmark of the global economy. Thank you very much for watching. If you like these discussions about where things are going and why they're going where they're going, then do please subscribe.